In today's episode, we are talking to one of the most successful investors in natural resource commodities and especially uranium. Right? We've been talking a lot about the uranium market. It's really been starting to heat up. We have Rick Rule's old company, Eric Sprott and his organization with Sprott, the billionaire Canadian investor, and his team getting involved in purchasing physical uranium. The price moved tremendously in a very illiquid supply demand market. So we're going to be breaking that all down. Make sure you hit the like button on this video to send it out in the YouTube universe so more people see it. Give us a comment down below. This is Go Uranium Go. Shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks, one of our first sponsors, actually the first sponsor we ever had on our channel. And so that's Vizsla Silver. And Rick, good to see you.
A pleasure to be with you, Jake. Thank you for having me back.
All right. So uranium market. So this is one you've been, involved in through many rounds. You had quite a historic round during the last one. It's getting pretty interesting. Give us an update. What the heck's going on in the uranium market and how do you see it unfolding?
Well, it's interesting, Jake. In preparation for this interview, replayed some earlier interviews that you and I did going back a couple years ago.
All right.
And the very first interview that we had, we talked fairly extensively about uranium.
Yep.
I was saying to your audience that I had made most of my money by speculating in commodities where the price that the industry received for the commodity was less than the cost of production, but where the commodity was necessary for the type of life that humans lived. And I pointed out that uranium cost the industry $60 a pound and was selling for $20 a pound. So the industry was losing $40 a pound, 130 million times a year, and that eventually it was going to become sort of boring and that the price would have to go up. I didn't envision that Sprott would be the cause of the price going up necessarily, but that's a different story. But it was useful, I think, to examine the fact that nobody cared about uranium when it was obvious that the price had to go up. People's expectation of the future is set by their experience in the immediate past. And since there was no price performance to justify the narrative, nobody cared. It's highly instructive that after the price had gone from $20 a pound to $45 a pound, which is to say after it doubled, people were interested when arithmetically it was precisely half as attractive as it was before. We'll later in this interview talk about why the price has to go up from here. But I think it's important for all of your listeners to know that the easy money has been made. The big money may be ahead of us, but the easy money has been made. And the instructive part of this interview is, to paraphrase Wayne Gretzky, don't skate where the puck is. There's a bunch of great big mean guys swinging sticks around there. Skate where you think the puck is going to go. The most important lesson in uranium is to be a contrarian and to speculate in questions where the answer necessarily begins with when, not if. That's the important thing about the uranium narrative.
Yeah, so let's talk about when. And I think when you said you were paraphrasing our first interview, you pretty much said exactly that. And it's been amazing to watch. And so I want to know the when on you and how your view on the prospects of this market has changed since Sprott being involved and seeing the price move like that when Sprott stepped in and started buying. And I want to know how it shapes your view now versus, say, when we talked about it a year ago. What's the when on this and where's the puck going?
Well, first of all, half the when is behind us. In other words, it's already occurred. The move from $20 a pound to a high of 51, now 45, 46, means that half the when is behind us. And people need to understand that arithmetically, the uranium market is half as attractive as it used to be. Now, mercifully, the market was so attractive that the remaining half offers people a lot of fun. It's important to note, I think, that the International Energy Agency estimates, pardon me, Jake, estimates that the total cost to produce a pound of uranium is somewhere between $55 and $65 a pound. That includes the cost of capital, mine site costs, exploration, all that kind of stuff, the total cost, not just the mining cost. So even at $45 a pound, the industry is making the stuff for 60 and selling it for 45, losing $15 a pound. It's important to note, too, that irrespective of the fact that Angela Merkel and Klaus Schwab and Joe Biden, perhaps, don't like uranium, that everybody, when they walk into a room and flip the switch, wants the lights to go on. Uranium, even in a country like the United States, which pretends it can afford to do without it, provides 14% of total electrical consumption and 20% of baseload consumption, which means simply that if the price doesn't go up over 5 or 6 years to the cost of production, the lights go out. So your listeners need to ask themselves, what is more likely? A circumstance where the price goes from 45 to 65 or 70 with inflation, or the lights going out? I would submit that the likelihood is on the former, not on the latter. So it's important to know that. Go ahead, I'm sorry.
I was just going to say, so, for me, I look at this, right, and we roughly use maybe 200 million pounds globally of uranium, 130 million or so are mined. So you got that, maybe somewhere around 70 million supply deficit. Sprott comes in and buys, a significant amount of that produced supply in what, like a month or so. And they're not even on the New York Stock Exchange. We haven't heard any huge commotion about any other big financial players smelling blood in the water and getting involved. And they move the spot like that with like 900 million left on their ATM. And I look at it and I just go, what is this like? What's going to happen? I mean, it seems, I know you always talk down my excitement because you had such a great experience last time, but I mean, I just don't see how this price doesn't rival what you had with what was like $134 last time. I don't see how the market cap doesn't outperform the total market cap of all the uranium stocks that you had last time, when there's this much more liquidity in the markets, there's infinite money printing, these hedge funds can borrow at 0%. I mean, what are the ramifications of this? And are you going to talk me back down again?
Well, let's start by saying, Jake, I'm an old man and you're a young man, and I require less excitement than you do. If you look back to the last uranium market that I cut my teeth in, there were only 5 uranium juniors that had survived a 20-year bear market, and there was no expectation for them. The starting market caps were infinitesimal. Paladin, which was my greatest success, had a $1.8 million Australian, 1.4 million US dollar starting market cap.
Wow.
So the idea that uranium juniors that today have starting market caps at 70 million or 100 million are going to yield the same type of percentage gains that I enjoyed with Paladin, the probability of that is nil. But you don't need to. Rational expectations are a good thing. I, if you will, burden myself with rational expectations so that all of my surprises are good ones. If you tell yourself that from here, you are much more likely than not to have a 50% upside in the uranium price and a 200% increase in the aggregate market capitalizations of the better uranium stocks over 2 or 3 years. If you have a surprise and the uranium price goes higher, and if the share prices of the juniors go higher, you have a positive surprise, not a negative surprise. If you told yourself that you were expecting a 400% increase and you only got a 200% increase, you could actually conspire to be disappointed with 200% over 3 years. So I don't need the titillation, I guess, of those types of gains. I operate on arithmetic. Now, I happen to agree with you that I am likely to be erring on the side of conservatism. for a couple of reasons. The cost of producing uranium worldwide is impacted by the same supply chain difficulties that you've described, by the same inflationary forces that you describe. And certainly, as the price of uranium goes up, the level of government sponsored extortion, that is to say, tax and social rents, will go up. This will happen. This absolutely positively will happen. The second thing is that in extractive industries, Jake, the supply side of the equation isn't tied in lockstep to price, which is to say that if the price of uranium goes from $45 to, let's just say, $75, one would expect in a normal market that supply would increase very rapidly. But that's not the way it works. A shutdown mine, even one that's been shut down in good condition, like Cigar Lake or MacArthur, would take 2 years to return to full production. So an immediate move in the uranium price wouldn't lead to an immediate move in supply. Further, when you take uranium out of a uranium mine, by the time you've refined the yellowcake to make it into a usable custom fuel for a reactor, it takes another year. So if the uranium price was to go to 70 tomorrow, it wouldn't change new mine supply, or at least nuclear fuel rod availability, for 3 years. The third thing to consider is that uranium is an extremely dense fuel. A little bit goes a long way. And if you have $6 or $7 billion involved in a nuclear power plant, and you are currently spending $30 million a year for fuel, if the fuel price doubles or triples, it doesn't matter. It doesn't change the cost of supplying electricity. So demand for uranium relative to price is extremely inelastic. So for those reasons, my estimates may be underestimates, but I would prefer to have positive surprises rather than negative surprises. If you have a viewership who doesn't get excited about 200% price escalations in the 2 to 3 year time frame, you have a viewership that should be buying cannabis stocks because they need that industry to get a grip on reality. A 200% outcome that is much more likely than not to occur over 2 or 3 years is a gift from God. And people who don't understand that need their head examined.
When you say 200%, you're talking like the index or like some of the main type?
I'm talking about a collection of real uranium companies. Remember that, as I said earlier, the last bull market that I enjoyed so much, there were only 5 companies at the beginning. Mm-hmm. A couple of weeks ago, Aditya Patanaik in our office in Carlsbad identified 65 uranium juniors worldwide. So the population of them is higher, which means that the population of junk companies is higher. And it also means that the market cap is large enough that it can accommodate more cash than came into the market last time.
Mm-hmm. Yeah, understood. Okay, so how do you think Sprott's getting involved will affect the timeline? Why are you laughing at me?
It sped everything up. Now, I got to say, Jake, there has been speculation on platforms like yours that Sprott and its principals, myself included, loaded up on uranium juniors before we launched the trust. The success.
I certainly never said that Rick Rule loaded up before he got our trust.
No, the truth is that the success of the trust surprised everybody, most of all ourselves. I had expected that the trust would need to be listed on the New York Stock Exchange
in order to make an impact,
in order to make an impact, and I misunderstood the hunger that particularly large investors like family offices had for this uranium product. The inbound traffic that Sprott got as a consequence of the launch of the Uranium Trust was of a different order of magnitude than we have experienced in our other products, including the Silver Trust.
Yeah.
And so the flow of funds into Canada was much greater than we had expected. We did expect that the spot market was tight, and we thought that the spot market was likely tighter than other people thought it was. We just didn't understand quite how tight it was. There will come a time, Jake, there are above ground inventories. And if the pace of Japanese restarts doesn't increase, we'll talk later about why I think it will increase. At some point in time, there will be a market clearing event where the money coming into the sector is met by some supply. And I hope that occurs sooner rather than later. I hope the trust is able to clean out the available inventories between 45 and 50 rather than between 65 and 70.
Because you're saying at 45 and 50, then these other inventories will come online to meet that?
Yeah, I think one of the things that happened in the last month is that people that had inventory for sale looked at the price run up and said, why would I want to sell at 37 when it appears to me 2 weeks from now I can get 45 or 50? And I think, ironically, if the price increase in uranium levels out a bit, some of the above ground inventory, which has been hoarded in anticipation of the continuing of the momentum, might get bored and might get sold to us. At least that's what I hope happens.
Okay.
More importantly, I think, Jake, and I'm not trying to belittle our own importance, two things to the future. Sprott, in its precious metals trusts, manages something over $12 billion on behalf of 280,000 investors, most of whom are American. It is likely that in the first or second quarter next year that the trust gets listed on the New York Stock Exchange. And I think that the increase in liquidity and hence the increase in capital raised through the ATM will be very different on New York than it is in Toronto. Very, very different. Two, I think that the political winds now favor sooner rather than later restart of the Japanese nuclear fleet. The Japanese citizenry have come to understand that Japan has no hope of meeting their Kyoto or Paris promises, burning coal and liquefied natural gas, that it's only with the restart of Japan's nuclear fleet that the Japanese can have both energy security and carbon neutral power generation. And if you restart 40 nuclear power plants in Japan, you increase demand for uranium by 20 million pounds a year at the same time that you reduce the supply available for sale from their existing inventories. That's a game changer. That's a true game changer. The third game changer, of course, is that utilities have been playing chicken with the market in that they haven't signed long-term supply contracts in the term market, but rather have relied on the spot market because it was cheaper than the spot market. Now that the spot market has become the Sprott market, that option is less and less available to them. And so you will begin to see circumstances where nuclear utilities, particularly in China, contract directly with suppliers at prices that are fair to both, which is to say higher prices, which will be good for the uranium market. It will be good for energy supply, and it will be wonderful for the viable uranium equities.
Yeah. So the last question I was going to ask you was about, I certainly didn't think you were anticipating anything like this, and that was why I asked you that. And you seem like the type of person that was very floored by how quick the movement is, especially because you always err on any market. You always err on the side of being conservative, and to still have like 900 million left in this ATM, and to not be on the New York Stock Exchange yet. I wanted to know, what on earth will happen if they get this Q1, Q2, 2022 New York Stock Exchange?
That's a really good question, Jake. I don't know. The other thing to know is that, I'm not a Sprott employee anymore. I'm a director of Sprott, and I'm a very large shareholder. But we haven't wasted really any time or treasure marketing. This has occurred of its own volition. We have been fairly aggressive marketers of our gold and silver trusts. Mm-hmm. And one wonders, I don't want to fuel speculative fire among your listeners, but I wonder what might happen as we introduce some of the 280,000 shareholders of our existing trust, mostly US people, to our uranium product. Understand that what's happened in our uranium product has been spontaneous and organic. Um, we aren't bad marketers. And to the extent that we explain the uranium narrative and the inevitability of the uranium narrative to an audience that's sophisticated enough to understand the precious metals narrative, I think it's much more likely than not that the momentum continues and perhaps accelerates. Ironically, the only thing that will lessen our impact is if the uranium price goes up by itself and people are less inclined. If we convince people that a market clearing price for uranium is $75, and we can say to people at $45, there is a likelihood that you can experience the better part of a double before uranium returns to the price that it needs to be priced at to ensure supply. That's a pretty easy case to make to somebody. If the price all of a sudden went to 75 of its own volition, then what we would need to say is that momentum is going to take hold, and we're going to have to rely on the greater fool theory, the same thing that happened the last time. In other words, you need a narrative trade to go higher.
To drive it to 150 instead of 75.
I don't want to make the narrative argument, and I don't want to buy based on the narrative argument. I want to get that for free. If I own it in anticipation of 75 and the market gives me 115 or 130, I've had a surprise. It's a surprise that makes me smile. If by contrast, I'm anticipating 130 on sort of a greater fool narrative, and I explain I receive 75, which I ought to be happy with, I've conspired to make myself sad. Not much sense in that.
Makes a lot of sense. Man, it's going to be crazy to see what happens if they get on the New York Stock Exchange in Q1, Q2.
I think we're going to be able to do it. It's going to take us a while because there hasn't been this type of product listed on the New York Stock Exchange. Mm-hmm. It's going to take a while too because some of the internet chatter about cornering the uranium market is unhelpful. The SEC looks at that and says, we don't want to see this as a vehicle for manipulation. But the New York Stock Exchange experience with our existing products has been quite good, and they're quite cooperative. People say, well, why is Sprott delaying? Why can't they list next month? We would love to have it listed next month, but this is a brand new product. We're going to have to get this through the SEC. We're going to have to get it through the NYSE. And people who have expectations that are short of Q1 2022 are probably kidding themselves.
Very powerful. So is there anything, as we wrap up on uranium, is there anything else that's got you exciting that you want to share interesting about it, or any final thoughts as we conclude this uranium chapter until hopefully we have a next leg up?
Well, my real hope, Jake, is that we get a leg down first. My real hope is that some supply comes out, that the more rabid uranium supporters get disappointed because the price doesn't go up for 10 days
okay.
and sell. And particularly, I'd like to see them sell the uranium juniors. I've been accused in alternative media like your own of trying to talk the price down, which I'm absolutely guilty of.
Rick, you got to keep saying that I'm doing it, though. I'm not saying that you're doing these.
I said alternative media. That's all I said, alternative media. Since I like uranium as a class, I'd like to see the uranium stocks cheaper. I would prefer to see them much cheaper. I'd like to own a lot more of them, which means I personally would like to see lower prices, because I think higher prices are ultimately inevitable. Mm-hmm. The same way that when I see action in the silver market, like the other day with the silver price off, mm-hmm. I'm thrilled. I could not be happier. I believe that higher gold prices and probably higher silver prices are inevitable. And the fact that I believe that means that I want to buy more of them, and I want to buy the equities, and I want to buy them more cheaply. The idea that an asset class that I really, really, really like gets cheaper, to me, is wonderful.
Amen. We've learned a lot from you. Very appreciative for everything that we learned, and I'm very excited to see what happens. It's funny how it all worked out, right? Because remember, you and I met first at your office in Carlsbad, and I wasn't
remember
even
it well.
doing this channel. And
Mhm.
I was like, Rick, like, what about uranium? I need something like what happened to you. And then it's just worked out so amazingly. It's been quite exciting across the board in commodities. So it's been fun to go on the journey with you. We want to encourage everyone right there down below in the description. Rick's got a free portfolio review on your commodity stocks. Don't send him any meme stocks, or don't send him any cryptos or anything. But if you want natural resource commodity type of portfolio, he'll review it for free right there down below. Make sure you hit the like button, give us a comment down below that says go uranium go right there down below, or Rick Rule rules in the comments right there down below. Hit the subscribe button to make sure you're notified for future episodes. You don't want to miss them. Rick, what else do we want to cover in conclusion?
I think that's good, Jake. I think that's good. I think probably the next time we talk, we should return to the gold and silver subject, because I view the current market malaise as a wonderful, wonderful opportunity. You'll recall a year ago, I was telling you that I thought the junior gold and silver stocks were overbought. And I was telling you particularly that I thought that the private placement market was unattractive because I wasn't getting warrants. All that's changed. I don't like always having to be the old voice of reason on your show. I like to be able to show some unbridled aggression. And I think when we get around to talking about the gold and silver stocks and private placements, that I'll be able to talk about unbridled aggression. The other thing that we should talk about at some point in time, Jake, is sustainable income. For some of your subscribers, particularly ones older than yourself, who save, the idea that they're getting a 0.5% yield or a 1.2% yield in a circumstance where the purchasing power of the dollar is declining by 5.5% is arithmetically unattractive. There are opportunities in the market where, admittedly, you take some risk, although I would argue that the risk is fairly de minimis, where one can earn 5 or 6% in industries where it's likely that the yields will increase. And although that outcome is nowhere near as exciting as a 10-cent stock that goes to $1, you can deploy real capital in investments where you're getting a current yield. And there are yields, there are strategies available where you can get yields with less risk that shelter you from the worst aspects of inflation. And I think that your audience doesn't hear stories like that as often as they should.
All right, deal. We'll put that on. We'll put on that on the list. Great to see you. Great to catch up. We'll cover that gold and silver next time. Thanks for your time. We'll have the link right there down below for everyone to have Rick do a free review portfolio. Smash that like button. Give us a comment down below for the YouTube algorithm. Uranium community. Copy and paste this link. Share it out on social media. And Rick, thank you.
Always a pleasure, Jake. Thanks for the opportunity.